Hi, this is Sean Hyman from MyWealth.com. I'm the head instructor here, and I just want to take you through today's video blog. You know, with the recent Fed actions, keeping rates unusually low, but also on top of that, talking about buying, $300 billion worth of long-term U.S. Treasuries, what are they doing? They're basically taking the rates and yields down artificially low to help spur economic growth. Now, that's some good and some bad, and let's talk about how this is going to affect you on Main Street. Because you just don't want to trust, Wall Street with everything that you've got. You want to educate and be knowledgeable yourself, whether you trust somebody like a financial advisor or whether you're doing something yourself. So let's go ahead and take a look at some of these things. With the Fed actions, the dollar's going to slide off. Why is that going to happen? The dollar's been rallying, for a number of months now. Why would it all of a sudden change courses? Well, the Fed's cranking up the printing presses big time, and anytime you put an oversupply of something out there, just the laws of supply and demand causes that to be worth less and for it to drop. So your dollar is about to drop in value. The Fed's going to sacrifice the dollar for the sake of stocks. And so you need to be aware of that and need to be able to take advantage of that, and I'm going to show you how in just a moment. Also, inflation's coming. By them pumping all of that ton of money into the economy and that money chasing so many limited amounts of goods of, whatever, wheat, sugar, gold, copper, everything that we use in day-to-day life, gasoline, oil, things like that. It means that these things are going to be heading higher in the months and year ahead, and so Main Street needs to be prepared for this, and so I want to show you some ways to tackle this so that you just don't have to sit by idly and let your earning power erode even more. There's things you can do to fight this and combat this, and a lot of people don't realize it. One of the things that you first need to do is, number one is beef up your savings. There's nothing like having some extra padding. The economy's still touchy out there. Things are still kind of bad out there, and probably will be for a little while longer. And I recently did release an article about how the economy is probably in its beginning stages of a recovery. But remember, economies turn like ships, not like speedboats. So this takes time, and usually takes longer than we'd like to think and even want it to have happen. So beef up your savings because of employment. Beef up your savings because of coming inflation. Beef up your savings for your own peace of mind and well-being. Things are going to cost more in the future, and we know it. We need more savings to have to be in preparation for that. I read an article the other day that says most Americans, over 50% of them, have only about 1 to 2 months worth of savings out there. You need to have more than this in savings, and many people, even those that made $100,000 and up, were only literally 1 to 2 paychecks away from not being able to pay their bills properly. So this is not just whether somebody's poor, middle class, upper class, whatever. This goes across the lines, no matter what somebody's income bracket. People simply aren't saving enough. And so that's number one. Number two, invest in ETFs and mutual funds. Now, why would I say that now? Because stocks have been down and down and down. And who knows if this is the exact bottom or not. But what you can do is invest in stocks and through mutual funds and ETFs, all with cash, no margin buying. And then that way you don't have to exactly call the bottom. But what are you doing when you do that? You're aligning yourself with the Fed. Remember, the Federal Reserve is sacrificing the dollar. They're killing it in order to save stocks. They got to get stocks up. Why? Because there's so many 401ks out there affected, IRAs, things of this sort. Corporate America runs off of it needs a higher stock price, higher valuations to survive out there. If you're going to go out and spend money, you first need your 401k and IRAs to recover, to feel like you are getting somewhere before you're going to turn loose some more money in your wallet, and the Fed knows this. So you can align yourself with the Fed by investing in ETFs and mutual funds. I would really discourage most people from investing in individual stocks just because it's tough to cherry pick, and try to pick a bottom on individual stocks when you're still in a down cycle, when we haven't gone into an uptrending mode. So this is really the best way for a lot of people to tackle this. Number three, buy commodity ETFs. What is inflation? Essentially, it's the price of goods going up. Well, those goods are commodities, the things that Main Street, really uses every day. Whether you buy your first share of stock or have ever invested in a commodity contract, one thing's for sure, you have bought commodities. You're using sugar, you're using wheat, you're using oil, there's gold in products that you're using, there's silver in products that you're using natural gas, these sort of things. There's ETFs that you can buy into these actual commodities. The nice thing about them is they're not expiring contracts. You're not buying on margin. You can buy with all cash and just buy the position, hold on to it, and sit back and watch it grow over time. This is one way that as inflation goes up, your purchasing, your money goes up through these positions and helps to keep the erosion effect away from your dollars. Because yes, your dollars are eroding, but these positions are going up because as inflation goes up, these positions here are going up and helping to keep pace with the actual underlying commodities. Number 4, buy foreign currencies. Now, I know this may sound weird to your average American, because they picture maybe going to a bank in some foreign land and having to give them their dollars and they take on euros or something like that. It doesn't have to be that way at all. You can have a U.S.-based firm, and I give you links to all this stuff in the written article. A U.S.-based firm open up a foreign currency account, or what people call Forex or currency investing account, and you can invest in currency pairs like the euro dollar by buying the euro dollar, buying the Aussie dollar, buying the Kiwi dollar or New Zealand dollar as it's also referred to. And in essence what you're doing is you're short the dollar while you're long or have bought these other currencies in exchange for your dollars. You're not having to physically exchange anything. You can have a dollar-based denominated account, or it can be in foreign currencies, either one. But it keeps the simplicity in all of this. So, buy foreign currencies. If we know that there's this oversupply here of dollars that's coming to the to the economy, and we know that the dollar is going to slide off as a result, the dollar going down is going to push these other foreign currencies up against it. It's like a teeter-totter. And so that's just one more way that how you can keep the erosion away from the effect of the sliding dollar. Next step, number 5, is get educated. Don't do any one of these steps before taking a course and getting educated. The $20, $25 and taking them online, and we've got the links there in the article so you can get started in that. Know how to save, know how to reduce debt, know how to invest in mutual funds and ETFs and which ones might be the best. Because I'm giving you a broad example here, but we get more specific in our courses. Know about foreign currencies and commodity ETFs. Again, we talk about these in our investing courses and our currency courses. Arm yourself with knowledge so that you don't have to depend upon Wall Street. Main Street needs to take charge and not just leave it up to Wall Street, because we see the decisions that we make, don't they? The greed takes hold of them, and they're not near as worried about you or your money and how hard you work for it near as much as you are. Help someone else. To me, this is one of the big keys, is to help somebody else. Maybe buy a friend or family member a course. Spread the word. Email this stuff around. We don't mind you spreading these articles around, our YouTube videos around. Spread them around to your, through your email, through your send them on to Twitter, to your Facebook and your MySpace accounts. Take our YouTube links and IM them around. Spread the word to help people. They need inexpensive ways to learn this stuff. They don't need a $500 or $1,000 course. They need a way to get educated, to know how to do this type of stuff. Feel free to email this article around to friends and family. Final thing, we've got a question of the day to where 3 people can actually win a currency investing course. Scroll down to the bottom of my article today, read the question, email me and answer that question, and as you email me, your name will get thrown into a pot. We will randomly pick 3 names out of that, and 3 people will actually win free Forex currency investing courses. Thanks so much for being with us today and attending.